Welcome to another episode of the Weekly Crypto Check-In, recorded on February the 12th, 2025. I'm your host, Robert Swarthout, and joined by my co-host, Andres Sandate. How's it going, Andres?
Hey, Robert. Good. It's staying warm here in a wet, cold, somewhat dreary Atlanta. How about you?
Yeah, same here. It's definitely still winter. The lady last week that declared winter, the victory over winter, I want to find her and blame her for all this nasty weather we had this week. So
yeah, we're getting a dose of it, and snow other parts of the country. So I guess the rain isn't so bad. But yeah, we've got a lot of stuff to talk about, including a fresh set of headlines around politics and regulation, and a little bit of rewriting of history to start us off.
Yeah, it's slightly different format today, but I think it should be good. So
yeah,
Pal here. I obviously wrote the bullet point for this one to kind of be a little bit clickbaity, but he literally said that he's surprised by all this debanking of the crypto, and we need to have a fresh look at it. I'm like,
yeah,
I just rolled my eyes at this. Like, he knew this was happening.
Yeah, we're talking about Fed Chair Jerome Powell. He testified yesterday, and of course, all the TV's business networks, including mine, were glued to his testimony. People want to know what he's going to do. Not that he gets to make the decision alone, but he's the voice when
he's the messenger, nonetheless. Yeah.
People want to know what's going on with interest rates. What are we going to see? And that's the open questioning from the Senate senators on the committee. We got into talking about crypto and got into talking about digital assets, and the fresh look is the idea that Operation Checkpoint 2.0, there was a lot of criticism from crypto and from folks in the digital asset space that were saying, look, you're choking off any innovation. You're shutting out the potential for enterprise to actually exist. And he came out yesterday and said, basically, we should take another look. Right. Why the strong reaction from you?
Well, because it's just like he acts surprised, like to hear that this even happened. Like, like, well, the evidence does not exist currently, at least publicly. We were talking before we started recording. I'm like, once Doge gets their chance to come over there, they're going to find the evidence and they're just going to publish it. I imagine that's how that's going to happen.
Right.
And I look forward to that day. But like, as a functional victim of this Choke Point 2.0, like having lost bank accounts a couple times, like I'm just kind of not in the mood for this whole like playing dumb type approach to it. So yeah. So it's interesting. I feel like there should be a lawsuit here. It feels like there's a possibility for one. I don't know how that works. Like, does he have, or does the Fed have some sort of cover that they fly under here? The Fed being a private business that is not attached to the government, it's kind of this weird thing. So we will have to see. So I'll move on to, I guess, our next topic here. So Binance and the SEC. There's a lot of enforcement cases happening with the SEC. There's 200 plus cases, I think we've said in other episodes. This new SEC, led by currently 3 chairs, one of them that was nominated to kind of temporarily sit in the seat by Trump, has kind of changed and had a shift on how the SEC plans to deal with things. But the SEC and Binance both submitted a joint order with the court saying we would like to halt any proceedings in our case for 60 days. I feel like this is the tip of the iceberg of things about to change in crypto when it comes to the SEC, at least the actions that are currently in place. So,
Robert, can you hear me now?
I can, yes.
Okay, sorry about that. Had a little bit of audio technical issue. So you were talking about Binance and the SEC decided to halt their case. Is it 60 days? They've agreed that they're going to come back in 60 days and see where they're at.
Yes, and they're waiting for the task force that Hester Peirce, one of the chairs, is. I think is trying to give guidance because, again, in the Binance case, we'll see in this particular Binance case. There's been other ones, obviously, but in this particular case, in the Ripple case, and the Coinbase case, a lot of these big headline cases, there's no allegations of fraud. So there's just the relook at all these cases from a lens of, okay, if there's no fraud, should we even be having these cases, or what's the focus? There should be a reset. These guys probably didn't have rules to play by to begin with. They were trying to be good actors.
The case goes back to June 2023 when the complaint was filed by the SEC against Binance and over a dozen entities affiliated with Binance that they were regulating, or obviously were operating at the time. The claim was an exchange unregistered, that they had a BD that was in a clearing agency, operating in securities that were not registered. So, I mean, it seems like without the task force having a chance to really go out and do what their mandate is to do, it's going to be tough for any of these cases really to go forward until we get more clarity.
Right. And to kind of, in some ways, tie our first topic with Choke Point 2.0 and PAL in with this topic, because I think there is a link. Binance.us, so the US version of Binance, summer or 2 summers ago, it's been a while, they stopped all operations based in fiat, so US dollars. They don't accept it anymore. It's all based in stablecoins. So I'd imagine they, like, as pressure was happening on Binance.com and all the stuff with CZ, I imagine that the Fed put their pressure on the banks that were banking Binance.us and tried to squeeze them there. So, those tentacles run a long way. So it's not just like going after individuals in that case. So,
yeah. And I think for people that are watching what's playing out in DC with a lot of the executive actions and a lot of what's happening with Doge in terms of, the CFPB is going to go away and the USAID is going to go away. I mean, I think the quick reaction to crypto and digital assets, could be they're going to just take away all regulation. The reality is the SEC is still filing cases, still enforcements. I think what they are also trying to do simultaneous with that is, and I think we've got a headline here about, crypto mom Hester Pierce came on Bloomberg yesterday, did a lengthy interview about crypto. But I think there is also the hope that there will be some regulation and there will be this task force taking action over the next few months, or in financial terms, quarters, to really drive the point home that we need we need regulation. We need some kind of stablecoin legislation, and we're going to get into that later in the show.
Yep, it will be interesting. And the part that jumped out at me the most was the 60-day. The particular number of 60 days. I don't think that was chosen by happenstance. My guess is this task force is further along than most people realize, probably building upon the work that Hester has done for years in her proposals. So maybe we get something, at least guidance in the SEC. That doesn't mean it's law yet. Obviously, that's Congress's job, but maybe some guidance would be great.
Well, hopefully also 60 days signals that, the executive branch wants action, wants a lot less talk and posturing and a lot more action here. And I think for folks in crypto like us, we'd like to see things accelerate as well.
Yeah, maybe they could just drop the 0, just do it in 6 days. It'd be great.
Easy now.
Yeah, awesome.
All right, this next one, I thought you had a good graphic, and I thought it was worth us trying to share it.
Yeah.
So what we're looking at here, Robert, is the map of the U.S. Tell us what the states in blue represent.
So the states are states that have pending legislation to maybe make a Bitcoin reserve or crypto reserve, something like that. That would be, it's not even yet to be voted on. It's still in committee effectively. So
but they've at least done some of the work. Yeah,
they've done some work. So the vast majority of them are in that state, and in that status, you could call it. Of those, I would say roughly half of them are what this website calls actual strategic Bitcoin reserves. There's definitely a Bitcoin only maximalist feel to this website. But it is helpful information. Some of them have a partial reserve, and I guess others, it hasn't been said how it would actually be structured, but the idea is there. 2 are in considering status. That would be Arizona and Utah. Arizona would be a Bitcoin only reserve, and they're basically buying Bitcoin, not alts, is the way that would work. And then I think the part that jumped out at me, nothing is further along than Arizona and Utah, I'll say up front. But what jumped out at me the most, and somehow it didn't even cross through my news feed, was North Dakota has already gone and rejected the idea. I don't know what the status of it was, how long it took, but I did find that kind of interesting. So,
yeah. Yeah. Well, one trend that I pick up on is that on the West Coast and the kind of deep South, it does appear, and I guess you could say to some extent in the Northeast, it doesn't appear to be at least capturing much of the attention of the state legislature there yet. So middle of the country, kind of upper Midwest, and certainly in the somewhat of the that Ohio, Pennsylvania kind of corridor, there seems to be interest. So yeah, I thought it was a unique website, just kind of graphically. We've talked about this over the last couple of months, but it's something that we'll show from time to time as these discussions at the state houses evolve.
Yeah, and again, that's BitcoinReserveMonitor.com. So
yep,
a little bit of a plug for them there. So our next topic is crypto. Kind of, is it waiting for its next catalyst? And it's absolutely there. It's a lot of things are in a ranging kind of trading pattern at this point. A lot of it's resting along the bottom of a channel, if you want to use technical terms, and kind of in some sense holding breath about what Bitcoin might do. Bitcoin was lower this morning. It's back up now. Today being the 12th, and the CPI numbers came out today, and they didn't look so great. So,
yeah, I mean, I think again, folks were watching Fed Chair Powell's testimony yesterday for signals that the Fed was going to resume rate cuts. I think the takeaway from the testimony was not so fast, not so quick. So there, and then you see the CPI numbers today, and you put it all together, and I think that the economy is not on the footing that at least the Fed wants to see in order to signal that they're going to resume rate cuts. So as a result, you saw some risk assets respond accordingly. I think for me, as just somebody that's followed the market for a long time, like, it's just not so fast. I mean, everybody in the market wants certainty, and I think the Fed's going to move at its pace. I don't think they're going to win a lot of fans in Trump's circle, because I think he'd like to see momentum early in his presidency, in his first year of his second term, and so we'll see. But yeah, it just feels like we are waiting on some big catalyst in crypto right now. I'm not sure if that's the right way to put it. You describe this technical aspect, but it does feel like the space is waiting to see what comes next, and maybe that will be regulation.
Right. It's it could be some news around crypto reserve, if there is one for the U.S., good or bad. There. So
yeah,
it's
in a boring market isn't necessarily a bad thing.
Correct. And admittedly, I would say since the election, obviously the election happened, and then you had Trump getting actually the inauguration, just the news around that around crypto. For a while, we were kind of a bit fat and happy when it came to crypto news, and not having news is a bit of a downer versus what we had 2.5 months ago was typically any news was bad news. So it's been a whirlwind for sure. So.
Well, I mean, value investors have had a tougher go of it the last, call it decade, as this has been more of a momentum market. And I'm speaking more broadly about the equity market. But, now if you sort of look at the market and look at where there's renewed focus, it's in companies that actually, generate real free cash flow and are returning money to their shareholders in the form of dividends, right? So those are the new darlings of the moment. So
absolutely.
So yeah, we'll see. Crypto needs to demonstrate that it can make money and has utility. We've always said that. So this is a year where potentially we may see some of the pieces put in place in order for that to take place.
Agreed.
But we should keep moving.
So Next topic. So Galaxy Digital had their Ondo conference this last week. You're the one that brought this into my newsfeed. I didn't hear much about it from stuff that I was reading, but I found it quite curious.
Yeah.
So Mike Novogratz,
Right. Who runs Galaxy Digital.
Galaxy Digital,
Yeah.
and he's the guy behind Grayscale and all that stuff. So it's kind of
Right.
a bit of a conglomerate.
Right. Formerly founder of Fortress.
Yep.
So yeah, I mean, he's an institutional insider within Wall Street by any stretch, but had gone all in on crypto some years back with the creation of
Probably
Galaxy
10 years ago at this point. So yeah.
Yeah. So he kind of goes back further than many of even the likes of Larry Fink and BlackRock and others who are constantly in the news cycle. So he put on this conference and had, I thought some interesting takes. Two that caught my attention. One was, I think he predicted, and I think this was also a signal of those watching Galaxy and their intentions, that the equity market, particularly the IPO market, would open back up in 25, and that we might see, including his, and he didn't promise this, but you might see more crypto companies looking to go public. That could potentially be meaningful, just because for the VC ecosystem and the cycle of getting liquidity, having an IPO market that's open, that people feel is accessible, is critical. So that was one thing. And then the other thing is Dan Moorhead, who runs Pantera Capital, which is a big institutional owner and investor in the crypto space. They have a lot of different products, but he came out and said, and this is sort of consistent with what he's been saying for several years, which is, are we in a bull market? Is crypto overbought, like in Bitcoin specifically? And his take was literally less than 1% of institutions own any Bitcoin. And if they just did 1%, think about how much that, and we've kind of heard that a lot, but I do think that these guys are talking to a lot of institutions, and it does appear, if they're being, forthright, that institutions are really starting to pay a lot of attention to Bitcoin. And we have a headline in here about Goldman and their purchases of IBIT. So yeah, just, more kind of institutional awareness and adoption.
Yeah. It's not terribly surprising. He even made the comment, I think he alluded to it, but like, people will ask him, is crypto in a bubble? Well, when nobody owns it effectively, how is it in a bubble? You need more people. I guess it's positive for us that we probably aren't in a bubble, but we will see how that goes. So,
yeah.
But talk about bubble, and not saying there's one here. And I'm not a big Michael Saylor fan. I think people have realized this, but like, sometimes there's signals when you're at the top of a bubble or top of a cycle. Michael Saylor could be our signal whenever we get there. So we'll have to pay attention to him. But they recently renamed from MicroStrategy just to Strategy. Kind of a bit of snarky comment to me is they only own Bitcoin, so that is still micro. Maybe not necessarily a number, but the single. But they have resumed their Bitcoin purchases. So
yeah, they bought them between February 3rd and February 9th, according to an 8K filing, at an average price of a little over 97,000, which takes their total to 478,740 Bitcoin, which at the time was worth over 45 billion. So they spent over 30 billion in this buying spree they've been on over the last few years, at an average price of 65,000. So we've talked about this. They sold a lot of stock to be able to fund these purchases. So you've got to have buyers of the stock. So they're number one, appear to be people buying the stock. They're giving them capital in order to go deploy it in an area where they think they can generate returns. And he said, and I thought this quote was interesting. As far as an update on their Bitcoin purchases on Sunday, he said, "Death to the blue lines, long live the green dots." So, as somebody who probably follows more charts than the average person, tell me what that means.
When I read that, I think he's referring to charting, but to me, that's not the kind of charts that I look at. So I was puzzled. And maybe I'm totally missing the point, but it was a head scratcher. So
yeah, probably will be a meme coin launched. Long live the green dots.
right. Yes.
So anyway, but that's a good segue into talking about Barstool founder Dave Portnoy.
Yeah. So he, I followed this a little bit closer than I would have any other meme coins. Certainly more closely than I followed the Trump one. But over the weekend, because Dave was down in Louisiana for the Super Bowl, and so he's like balancing the time he's there with all the responsibilities he has with what is going on in crypto land. We'll say it up front. There's no evidence to say that he launched any of these coins himself, but there was one called not Fortnoy. Totally messing up the title of it. Jail stool. So somebody was joking that he should go to jail because stuff that he's done. He found this funny, and somebody had given him some coins, and then he put some more cash in himself, and then he was tweeting about it, pumping the price up. It went from worth like $6 million market cap to it's one point I remember seeing it 200 million over the weekend. So an incredible percentage change there. And then he found another one. Somebody sent him that was Fartnoy. So just it's meme stuff. It is purely how it goes in crypto.
Yeah, it's like high school locker room stuff,
right? Yeah, especially for his crowd. So I don't know. It's half entertaining, but he has been sued about crypto in the past. And he jokingly said he lost all of his money the last time, so there's no way that he should be sued because he's the one that lost all of his money, not some of his money, as a bit of a paid endorser of sorts. So I don't know. Like in the old SEC, I guarantee he wouldn't have done this. Like I think he's paying enough attention, has enough people around him advising that he wouldn't have done this. And this new SEC, this is probably totally fine. In some sense, Trump gave the signal that it's fine by doing what he did the weekend prior to inauguration. So it's pretty crazy.
Yeah, I mean, I think the other headline I was going to put in here was about the meme coin that was launched when Elon Musk changed his name on X, but it just wasn't. It was too X-rated to bring into our family-friendly weekly crypto check-in show. But I don't think either of them go and get close to the line in terms of what is potentially an old SEC regime would look at and say, this gives us exactly what we were looking for to come after you.
Right.
So I generally, yes, headline agree. I do think that the broader story, though, is that meme coins continue to demonstrate that there is this huge bifurcation in crypto. There are people who want to go and gamble effectively, and if they get dumped on and a token goes, and spikes and then goes to zero in a matter of a day, they're willing to lose whatever small amount of money they probably, considered putting in. There's a couple of people, couple wallets that made a lot of money.
Right.
And then you have the whole other side of crypto, which is, the one we're focused on, which is, very much focused on what's the utility, where is this industry going? Are we going to get stablecoin legislation? It may arguably be the one that gets a lot less headlines, but hopefully it's the one that really paves the way for where we want to see this industry, sort of fulfill its promise.
Yeah, I was actually, my wife of all people asked me about the Dave Portnoy thing, and I was explaining to her, I was like, the meme coins right now feel like an intermission or commercial between all the important stuff in crypto. We're just kind of entertaining ourselves with it right now before the market has a chance to kind of go on its next journey. So yeah, but certainly this crypto cycle is all about meme coins currently. So
yeah.
Moving on. So on a more serious topic, prior to recording, we haven't seen Trump officially say this, but the rumor is that the nomination for CFTC chair is going to be Brian Quintes. I think if I say his name correctly, or Quintes.
Yeah, I don't know if that's Quintes, but an A16Z VC.
And he used to be at the CFTC as well. So
yeah, very, very much a crypto fan or crypto supporter. Is being.
Yeah, but what's interesting about this one is while we again haven't seen Trump say anything, saying he's nominating it, the rumor was circulating all morning, and then I even found a tweet from current acting chair of the CFTC, and she was congratulating him on his new job. So it seems like it's going to happen. I can't imagine she would have made that tweet if it wasn't going to. So, but
Yeah.
more further proof that it's like, not to say that the CFTC only cares about crypto, nor should the SEC, but we at least don't have an adversary in that position going forward, at least for the next 4 years. So
Yeah. And who knows? It could be signaling that under, President Trump and with the crypto task force and with, the folks that are in place in his inner circle as far as advisors, that perhaps the CFTC will be more out in front in terms of crypto regulation and crypto
we'll have more jurisdiction. Yeah.
than the SEC for sure seem to want to be out under Gensler, under former President Biden. So
yeah, I would guess by summertime we have decent clarity on how this is going to go. Maybe not full rules, but we're going to have more clarity than we've ever had before by a magnitude of difference, would be my guess. So
yeah.
So our next topic, kind of segueing here, the SEC, so Commissioner Peirce, Crypto Mom, as we referred to her in the past as, came out and said that meme coins may be outside the jurisdiction of the SEC. And I mean, assuming that they're not all like a meme coin is not held by 5 wallets, it actually has some actual spreading out of the tokens amongst a lot of wallets. I could see the CFTC caring about them more, admittedly, and in some ways the gambling regulations may actually come in on the top of meme coins too. So it's kind of this weird overlap.
Yeah, she gave a lengthy interview. Hester Peirce, who's one of the few holdover commissioners from the SEC under this most recent presidential transition from Biden to Trump, and she's been more forward about wanting crypto regulation. Couldn't get anything under Gensler. She's effectively the one voice the industry, knows, or at least that has been out vocal and has been on the circuit speaking at conferences, etc. So again, I don't even think this interview happens under President Biden. So for her to go out, and do a lengthy 15-minute interview on Bloomberg or whatever on their crypto show, I think just shows that there's more air cover out there to go than there has been in some time. So
absolutely,
I think we can't get more. The market, crypto, cannot get enough of these types of folks going out and speaking about what they want, what they see, and providing their views, because it's not something that the industry had for the last 4 years, at least,
or ever, not just 4 years, ever.
Yeah.
But it's certainly the last 4 years were more of a challenge. Agreed. So what it's going to take is regulators, which is our next topic. So the regulators coming in, Congress putting regulations in place so the regulators can do their work. So this last, I think earlier this week, a U.S. House rep came out, was talking about, because they had this bipartisan panel and lawmakers were showing basically it's like how tricky it is going to get crypto regulations, because it's not a cakewalk. Each side are going to have their own things. The Republicans obviously have control of both the House and the Senate, but it's not quite that easy, unfortunately, because there's such a small margin of error there for the Republicans. So,
yeah, I mean, it's like the least popular word in politics, called bipartisanship.
Yes,
we'll have to see if there is a willingness to find some common ground, middle ground. It's not a fun way to think about politics for probably either side right now, but nevertheless, the industry will not move at the pace it needs to under President Trump, unfortunately, without Democrats and Republicans trying to come together on stablecoin legislation, which is probably our best hope in terms of legislation in the near term. So yeah, I thought it was the right term. It's not a cakewalk. None of this stuff ever is. But even with, like you had said this last year before the outcome of the election, even, under the first Trump presidency with Congress, behind him, he couldn't, get his full agenda in place. So we'll just have to wait and see. But yeah, the first hearing, I think, raised I don't want to say doubts, but just raised the reminder that this is DC and this politics.
Yeah, it's a little sobering, right? I mean, like,
Yeah.
I think if I hold any hope, it's that with the whole crypto czar with David Sachs, like the ability for him to kind of come in and be a voice, that is the White House that has some level of validity behind it. It's not just a politician saying something. I think may help, but who knows? It could be some of these politicians that are up for re-election at the midterms digging their heels for whatever reason, and we have to fight through that. So,
yeah,
but yeah, we will see. Next topic is Goldman. Goldman's been buying Bitcoin ETFs, Andres.
Yeah, I mean, the overall takeaway here is, obviously one of the venerable investment banks. They many of these firms filed 13Fs, which are required filings when you own a certain amount of securities, over a certain amount of securities. And so they give a glimpse, if you will, into the portfolio of what these institutional investors own. And as of their filing on Tuesday, it showed, which is their final one for 2024, it showed that they had increased their holdings in IBIT to 1.27 billion. So call it $1.25 billion of the BlackRock iShares Bitcoin Trust ETF, which is IBIT, which is the largest Bitcoin ETF by AUM. But what's notable is the percentage increase in the amount of shares owned from the prior quarter, which is just, literally 3 months, right? So almost a 90% increase in the amount of shares that Goldman owns. So yeah, pretty bullish move, right? Again, we've talked about this for a couple of years, like institutional adoption. Will institutional investors embrace Bitcoin and crypto? How will they embrace it? Direct ownership through the ETF. In this case, we have a pretty clear signal.
Yeah. I don't think that the 13F would show this, but my guess is the vast majority of that buying happened after November the 5th, when it was clear that Trump had won. So I don't know. It's we're going to start seeing a lot more of this, and not just from the investment banks. I think it's going to be from sovereign wealth funds and all sorts of other companies. We've heard rumors that, and we've talked about it, like Amazon or Microsoft, that kind of stuff.
Yeah, that one of my predictions for 25, or things I was looking for in 25, less of a prediction, more of something I'm watching in our end of year letter, was what would be the composition of ownership in the top 20, top 30 holders of Bitcoin 1 year from now. And, clearly MicroStrategy, or now Strategy, is one of the biggest, if not the biggest. But would we see bigger blue chip names, the likes of the Magnificent Seven or some of the big Wall Street firms? So something we'll pay attention to over the next 10 months.
Sounds great. So our last topic is a bit of a crazy story. So this kind of goes back to the inauguration week, or the weekend of inauguration, leading up to it. And that's Friday night around, I think, 7 p.m. is when Trump launched his meme coin, or somebody that's, I guess, related to Trump launched. I can't imagine.
Yeah. So, I mean, effectively, he and Melania launched these meme coins the weekend before he's going to be sworn in as president of the United States. And she's going to be, first lady, right?
Yeah, absolutely.
So they do it Friday night. And who's MoonPay?
MoonPay is basically another exchange that exists out there, like a Coinbase. And they have sole basically access or rights to the liquidity for onboarding people into a decentralized exchange, kind of, I guess, arm lengths away from MoonPay for Solana. All this happened on the Solana network, not Bitcoin, not Ethereum, not XRP, but on Solana.
But if you are an individual and you say, oh, there's a way to support the Trump coin or buy the Melania coin, you go to the website.
Right.
You then see MoonPay is on the website, and you're able to set up an account.
Yeah, you sign up an account. Over the course of that weekend, 750,000 people signed up accounts.
Okay.
So
they may never have heard of MoonPay in their life,
or any of other crypto for that matter.
Or any crypto. They go on, they put their information, they put their credentials, they put down a form of payment, and they say, I want to buy $100, or I want to buy $1,000 of the Trump coin and $1,000 of the Melania coin.
Correct.
Okay.
So that was happening.
So if that's all happened, we saw this huge spike in interest.
Yep.
Going back to that Friday night to
Saturday
he gets
into
sworn
Sunday.
in, right? He gets sworn in.
Yep.
Okay.
So launches on Friday. Saturday morning, MoonPay operations team realizes they don't have enough stablecoin to be able to pay out all the people that are selling and all the trading activity that's happening on MoonPay. That they're going to have a liquidity issue over the weekend. Granted, this is not only a weekend; it's a long weekend because they got Monday off because it's a holiday. So they reached out. The CEO did reach out to Mike Novogratz at Galaxy, which we talked about him earlier on this episode.
Crypto OG.
Yes. Basically told him the story. Basically, we're basically having a liquidity crisis, and
not a good look.
Not a good look.
Being very honest, we're not a good look if this is all happening right after you launch your new coins.
Correct.
It doesn't matter who the sponsor is. It doesn't matter who the issuer is. Like,
right.
This provider's in a liquidity crisis. They call one of the blue chip names in crypto,
right,
and say, we need capital or else.
Yeah, right. Or new people coming on the platform won't be able to sign up to make transactions, or current transactions won't go through. So it would have been a bad look for everybody.
So what did Novogratz do?
So did his due diligence, got his team involved, put a contract around it, and he sent them in stablecoin $100 million because that's what they asked for.
Okay.
A lot of money. And again, this is happening on crypto because it's 24/7. The settlement cycle is instant. It's not like, oh, we have holidays. So
remember that company FTX when they said, give us a day, we'll get you your money back? That led to a problem.
Yes, absolutely. So that was Saturday. They woke up Sunday morning and realized that the market cap of the Trump coin had gone from 30 billion to 70 billion. Trading activity had only accelerated, and that they needed another $60 million to kind of make it through, by their projections, make it through to Tuesday when traditional finance system started working again. So they reached out to Brad Garlinghouse at Ripple. Ripple ended up working with them, but it was so late in the day they didn't think they could get it done before they needed the actual liquidity. So Ripple ended up sending the money to Galaxy, who already had the contract in place with MoonPay, and basically, so MoonPay got $160 million to be able to get through the long weekend, and by Tuesday at 2:30 Eastern time, they had paid it all back and all this stuff. What's interesting is their CFO of MoonPay sits on a board that deals with some kind of ETFs. And they had relationships with people at BlackRock, where MoonPay kept all the reserves at. But on the weekend, no one at BlackRock's offices answered the phone call. So they basically had someone she used her connection through that board to get to someone at BlackRock to have someone basically vouch over the phone that there's no other liens against the reserves sitting at BlackRock. So because there's been a bunch of bad stories in crypto when it comes to reserves or lack thereof.
Yeah. Are they there or are they not? Yeah,
absolutely. So at the end of the day, this ended up being a great story. I think that it just kind of came out today. So it's kind of been a little bit under wraps of sorts, but I think it's a good look for Mike Novogratz. It's a good look for Brad and Ripple, and everyone, worked out at the end. And now the Trump coin's down 80%. So here we are.
Okay.
Yeah.
Postscript. Sometimes the story captured within the story is really
more entertaining.
Yeah, it's more entertaining. So, I mean, again, this is probably not something that would have bled over to the broader financial markets. It's also, I think, an example of where a couple of meaningful players in crypto got those phone calls because they could carry weight and they could get things done in a short amount of time.
Right.
If this was, probably, I can't say, I'm speculating, but if this was just any other meme coin launch, you probably
wouldn't
never even get this guy on the phone, right? So
probably not.
Yeah,
because both of these, Galaxy and Ripple / Brad, obviously don't want to get on the bad side of Trump. So you have that whole dynamic. There's this weird combination of things going on here, but pretty crazy story. So
yeah, for sure. All right. Well, we went way over this weekend, but that was a good one to end on.
Yeah, it's fun. So thanks for joining us on this episode of the Weekly Crypto Check-In. If you want to stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-In. Take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.